Welcome back to this pre-budget special, What India Wants. Joining me in the second panel are Kaushik Chatterjee, the CFO of Tata Steel, N. Shivaraman, the head of all the financial services activities of Larsen & Toubro, and Mr. Hemant Contractor, the CFO of the country's biggest bank, State Bank of India. Now, what would be the biggest macroeconomic challenge facing the country? I guess anybody would say it is inflation. But what has the budget got to do with inflation? Well, here's the argument. If one looked at the net borrowing of the government of India from October 1, that is just after Lehman, October 1, 2008 to March 31, 2011, in the 30 months, the government on a net basis has borrowed 9.2 lakh crore. Now, this compares to, if you compare it to the previous 10 years, from 1999 to 2008, September 30th, it borrowed 8.6 trillion rupees or 8.6 lakh crore. Clearly, in the last 30 months, in the name of fiscal stimulus, the government has borrowed a lot of money, and that huge fiscal deficit has gone into the system and created its own inflation. So clearly, fiscal deficit is inflationary, I would think. Starting from that, let me address the question to you, Kaushik. Do you think fiscal deficit and controlling deficit should be the first philosophy or the first priority of this government, or should it not bother so much about deficit but rather concentrate on growth?
Theoretically, these are incompatible objectives, low inflation and high growth. But therefore, there is a careful balance to be undertaken between chasing growth, because growth is a multiplier for future economic activity, and if you don't chase growth, then all hell will break loose at a point in time, especially with deficit numbers being so high. So managing the fiscal deficit or managing the deficit every year is certainly the highest priority, because the credit confidence on India as a country comes when you are at a fairly good level of managing your day-to-day. And then you channelize the policy decisions which facilitate growth. So I think it's interlinked. It's two ends of the spectrum. It is also something that we are also importing inflation in certain ways. So it's not entirely a domestic issue. You look at food inflation across the globe, it's worrying. Commodity price inflation, it's across the globe. So it's not an isolated India story. But managing that inflation in the context of the growth is the most important priority for the government. And the budget is, to me, not only a ways and means statement, but it is the direction of economic policy, which every year we tend to revisit.
Would you, as a representative of India Inc., at least admit that this can't be the year of tax giveaways?
No, I don't think any year is a year of tax giveaways, because
it was last year.
I know, and there is the political issue which comes in every 5 years in our country in a democracy. But I think fiscal discipline is certainly the most important aspect, which not only leads to counterintuitively to not having growth, but there are significant leakages in our system, which also lends to this deficit number.
Shivaraman, coming to you. You know, as a person who raises money for infrastructure, now you are raising money for infrastructure. Maybe a couple of years ago, you were borrowing money for infrastructure projects that you were implementing. Would you say that things have become way more difficult, or getting to be more difficult in the past 1 quarter? And therefore, at least from the point of view of cost of capital, the government owes it to keep the deficit in control. It's a very, very plain connection. As deficit increases, government is just, preempting resources. It's elbowing out private sector. So, at least for the sake of cost of capital, deficit control should be predominant in the government's mind?
I don't think deficit itself doesn't worry me so much. What causes deficit is one of the most important things. Like, if you're going to support consumption through deficit, this is what we have seen. The worry for me, as somebody who raises funds to support infrastructure project, is basically I don't have a view on where are we headed on inflation. Are we going to control it? Or you look at the interest rate curve, it's so flat. It's one of the most harmful things to happen to borrowers. You do not know which maturity you want to borrow at, and you don't know how to lend it. Today, RBI is confused to some extent, because There is an impending liquidity that could end up coming in because as the government picks up its spending, continues to build its deficit. At the same time, you can't allow the rates to remain low, definitely not at the shorter end. So there is a huge amount of confusion. There is a 1-year money at 10.5%. 10.5%. There is a 3-year money available at 9.5%. So as borrowers or investors, you don't know which one to believe, which one is to correct. Right? That's why you continue to see incremental change in the regulated rates. Right? I would have liked RBI to do 0.75% one shot and be done with it, whereas you leave an expectation in the market on an ongoing basis. So this is what is very harmful. I don't think liquidity as such is a concern, more so for infrastructure projects when you can get money from abroad in addition to other things. In fact, the rest of the capex is really not picking up. Most of the funding, the credit growth that you see in the banks are also towards, to some extent, consumption and to some extent on the working capital side.
So you're saying finance is not a serious problem for infrastructure companies?
It's the uncertainty on the rates, where are they headed, right? Can we predict that the inflation is going to come down? No, I think several people have predicted at the beginning of this year, but it has not happened actually. See, one of the things that government has missed out perhaps is that during the benign periods of inflation, we did not pass on the cost increases on the fuel side into the system. Today, it's a major political problem if you want to revise the price by about 10% and 15%. Now, so government has to perhaps sacrifice on taxes, then it has got a problem of dealing with the deficits on the other hand. So I think it's a classical problem which every government faces. I don't think US is away from it. They're also struggling with
they are perhaps deeper in it. But
Absolutely.
What I'm trying to come to get from you is whether deficit control is that important, and your own sense is that even if the deficit increased and if the yield, for instance, on the 10-year went to 8.5, you won't have a problem?
Deficit as such is not a problem. I keep repeating that because the money which the government raises comes back to the system end of the day. Right? Money available with the consuming public or the saving public. So it gets back into the system. If you ask me, deficit itself, to the extent it funds consumption, is a problem because it pushes up the prices.
Okay.
Right?
Well, let me get the banker in that case. Mr. Contractor, clearly the government depends on people like you to buy the bonds. Now, is that an issue if, the expectation is that this year as well, the government would come with the same amount of market borrowing that it did last year? So one assumes, a little less than 4 lakh crore will be the net government borrowing, and gross, of course, will be something like 4.5 lakh crore, which means you're going to be faced with another 48,000 crore every year, every month, which will come in the form of bonds, 12,000 crore every Friday that you will have to absorb. How do you see that? Do you think that that is going to push up the cost of money in the system to 8.5 or thereabouts, and therefore you will start finding it difficult to lend at a reasonable rate to infrastructure companies or generally India Inc.?
Well, you are right in saying that the borrowing program, the net borrowing will be of the order of about 4 lakh crores or so. But then you have to remember that last year also, the government borrowing was of the order of about, or in the year which is going to end, is going to be about 3.5 lakh crores. So if you look at it in that context, it's not a quantum jump in the borrowings, and the market has been able to largely absorb this increase in borrowing. So going forward, in fact, the major concern for me here would be that in the context of rising interest rates, the debt burden of the government is going to increase because the cost of these borrowings is going to be pretty high, and that is something which probably is a cause of concern to the government. But going forward, if the economy grows on expected lines, 8.6 or 8.5 this year, probably a little less maybe next year because of inflation and other concerns, I suppose the market will be able to absorb the added borrowing of the government. Yeah.
Well, 8.6 is not everyone's consensus for the next year. The consensus appears...
No, next year I said 8.3. This year probably 8.6. Yeah.
All right. Well, the consensus could be a little lower, but the higher end of the range. But you don't see a borrowing program of 4 or 4.5 lakh crore pushing interest rates to a level beyond 8.5%. That's not your worry. That sovereign will be borrowing at 8.5 or thereabouts, and therefore you're forced to lend to an infrastructure company at maybe 11 or 11.5. Is that a worry?
Well, it's not been a problem so far in the sense that we've been able to pass on the increase. See, if you see the increase in the lending rates of the banks, in the last 4 or 5 months, most of the banks have increased the base rates by quite a bit, and we have not faced that much of resistance so far from the corporate sector. The absorption has been quite good so far. And going forward, I don't expect the interest rates to really go up that steeply. By maybe RBI is hinting at another probably a 0.25% increase in the repo rates and all that. And if the measures that are being taken by the government to tackle inflation begin to bite, then we'll probably not see so much of an interest rate rise